Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Legendary investor Jim Rogers was in his early 30s. Those were the early years of his quantum fund. Rogers was invited to dine at a fancy Manhattan restaurant with a bunch of successful investment managers. For a new hedge fund, it was a big deal to hobnob with fellow market wizards. Suddenly, the host asked each guest to recommend a stock. The names of various growth stocks were confidently spewed. Then, Rogers named Lockheed Corporation, which later became Lockheed Martin. The polite members of the group raised eyebrows. Some smirked, some laughed. One hedge fund manager whispered, "Who buys stocks like these?" Rogers was understandably embarrassed. It was his first dinner with a group of elite investors, and his pick was scorned. Not for long, though. Lockheed appreciated 4,000% from 1973 to 1983, and Rogers made a killing on it. Hi, I'm Tanushree Banerjee, editor of Equitymaster's Blue Chip Recommendation Service, Stock Select. Welcome to Safe Stocks, where we discuss ideas to create and preserve wealth in the safest businesses. If you haven't subscribed to Equitymaster's YouTube channel yet, please do so and click on the bell icon to get notifications for my latest videos. Now, like I was telling you, Jim Rogers made a killing on the stock of Lockheed Martin in a decade. The reason? Rogers had noted a hidden element in the stock of Lockheed that no one else had done at that time. The hidden element was Lockheed's investment in a new age defense electronics. It was when the US defense company was near bankruptcy. He was betting safely on this hidden element at discounted valuations. It paid off massively for Rogers over the long term. But the question is, how did Rogers know that Lockheed would eventually turn into such a huge multibagger? Was he speculating? Well, the other fund managers may have thought so, but here's the real story. You must have heard or read about the Yom Kippur War of 1973, a war that changed the defense landscape in Israel forever. A coalition of Arab states led by Egypt and Syria launched a surprise attack on Israel. Naturally, Israel was caught on the back foot. The Soviet-supplied missiles used by Arab took a heavy toll on Israel. Particularly, the Russian self-propelled low to medium altitude surface-to-air missiles dealt a huge blow. It was widely acknowledged that the Israelis suffered huge losses during the war. Legendary investor Jim Rogers was then watching the geopolitical developments closely. So when it was reported that some of Israel's military technology was obsolete, a thought struck him. It was the US that had supplied most of the weapons to Israel. That meant the American defense technology was also well behind the Russian, and that the Pentagon would have to spend billions to catch up. Remember, this was also a time when the Vietnam War was coming to an end. So the US spending more on defense seemed like a far-fetched idea. Most investors believed spending on defense would be dramatically curtailed. Also, US defense firms were then not on a solid ground. They were considered pariahs by the market. Stocks of American defense giants like Lockheed Martin, Northrop Grumman, etc. were trading at huge discount. Jim Rogers, though, wasn't convinced. He believed a massive modernization of the American defense forces was inevitable. He traveled to Washington to converse with Pentagon officials and defense contractors across America. He also figured out that the modern battlefield was fundamentally changing, that the new arsenal would be sensors, laser-directed artillery shells, and smart bombs. And all of these would need massive investments. Rogers firmly believed that it would be only a matter of time before defense spending took a dramatic upswing. His assumptions were bang on. After all, which country would want to compromise on its border security and defense? So, Rogers started buying US defense stocks when they were very cheap. Soon enough, US President Ronald Reagan initiated a program to revitalize US defense forces. The spending was not to be financed with tax increases but with borrowings. As a lesson from the Yom Kippur War, the US began to develop radar stealth technology. Israel too started investing in its own defense technologies. Rogers' investments in defense stocks turned out to be amongst his career best. This was in the US 5 decades back. Cut to Ukraine in 2022. In early March, a song titled Bayraktar, rendered by a young Ukrainian soldier, debuted on the YouTube. The song instantly went viral. Bayraktar, the song which the young firefighters refers to, is a Turkish-made combat drone. These drones wreaked havoc on Russia's army. During the Russia-Ukraine war, loaded with laser-guided bombs, these drones have annihilated entire tank columns. Combat drones, both Russian and Ukrainian, are outlining the face of the war. Drones are nothing but the new age defense electronics. So any investor tracking global defense purchases cannot miss them. But so far, they are the hidden catalyst in defense stocks. In the US, Pentagon's budget for defense systems is expected to go up 1.3x by the end of this decade, 2030. But at the same time, an almost equal amount would be spent on drone R&D. The post-pandemic global drone market size is expected to go up from about $13 billion in 2022 to about $30 billion by the end of this decade. To add to that, drones will also find applications in agriculture, law enforcement, surveillance, delivery services, worksite efficiency, private occasions like weddings, and so on. So the possibilities for the use of drones are endless. The Indian government is keen to make India a global hub for manufacturing of drones by 2030. As per an estimate by the Civil Aviation Ministry, India's drone sector will achieve a turnover of 150 billion rupees by 2030 from just about 0.8 billion now. That's 187 times growth. Does that sound obnoxious? Remember, Rogers bagged 4,000% gains on a single stock, Lockheed Martin, in just a decade. But you may ask, then what is hidden in this opportunity in India? Well, until 2018, only NATO members could buy drones. But since then, India became one of the biggest buyers of drones from the US and Israel. And after we got access to the technology, we started producing them indigenously. Plus, the DRDO, which is the defense research entity in India, it has been spending millions on scientific research to make better, faster, deadlier combat drones. Ones which can fly longer distances and deliver bigger and deadlier payloads. The Indian Navy is aware of the Chinese regularly operating underwater drones for surveillance of our naval assets. So, the DRDO is now developing underwater drones with twin surveillance and strike capabilities. The defense company that is collaborating with DRDO to build such drones is so far out of the radar of most investors, and that shows in its valuations. The drone sales to Indian Navy may not make a huge difference to the company's revenue for some time. But it's only a matter of time before it wins massive defense orders for such drones. I am keeping a close watch on such stocks, and you could track my views on them in Equitymaster's free newsletter, The Profit Hunter. Hope you like this video. Stay tuned for more such videos on the safest and most appealing permanent wealth creating stocks. Thanks for watching.